Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Wednesday, July 24, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Well, the market got taken out behind the woodshed, shot 3 times, proceeded in a meltdown operation, a trend day down pretty much all day long. That doesn't happen that often, but it does happen. Let's dig in a little bit and talk about a couple of things. A, where are they going? That's item number 1. We're going to get to that. B, when will they get there, or when is a good time for price and time to converge? And here's another hint. It's coming up. Putting you on notice, we're going to be looking for a low. Doesn't feel like it, never will look like it. Media will be telling you the market's going to go down a whole lot more because of XYZ, ABC. The Fed this, interest rates that, earnings this. But the market is headed to a destination, and for the most part, it does the same stuff over and over and over again. And if you could get the time right, and you could have the price zone right, it's the makings of an opportunity. Write that down. Put it on a sticky note. Let's start with, we're looking for a cycle low. A couple of weeks ago, one of the traders in the live room asked me, I believe it was Shannon, who asked me, hey, do you have anything, a cycle coming up? And the market was trending up. It was up here. It was around the 12th or 13th of July, something like that, or 12th or 15th of July. And what I said was, yeah, but it's interesting because I'm actually looking for a low toward the end of July, beginning of August time frame. Well, lo and behold, the market turned, and here we are trading down into that time frame looking for a low. So the answer from a timing perspective is anytime, really not necessarily this week as much as I had my eye on next week, maybe even bleeding into the week after. Something in that neighborhood from a time perspective is where I was looking for a timing low. Now, let's talk a little bit about price. Now, before we get to price, let's just go over a couple of other things first to frame the situation. Last night's thumbnail of the video was next leg down. Last night, we looked at the possibility of an A leg down, B leg up, and C leg down. So now that took place. The official completion is below the low of the A leg. So the ABC thing is done. Doesn't mean price can't go lower. They did and they can. It's just the ABC thing is over. Remember, the other thing we said was once they get below Friday's low, that's where the next leg down starts. Well, here it is. Now, before we get to the expected prices on the downside and the reasons why, I just want to point something out real quick before I forget. This is a snapshot of about 25 of the Lazy Swing Trader closed trades. So you can see them here. You can see the percentage of gain or loss on the right-hand side here. These are all base hits. Some are doubles. Some are played with options by some traders so they get a lot of gain fast. But the design is for base hits. A lot of these have second exit targets still open on the open list. So you're seeing first target. You're seeing the risk-free emotionless trade evolve from when they hit first target and make it onto the closed list. But wait, there's more. I want to depict it another way. This is one of the lists that I look at in the back end, if you will. These stocks are the same as we just saw from a member's viewpoint. But what I want to show you is what would happen if you put $10,000 into each trade? Well, first trade, second trade, third trade, and so on. Here's the dollar profits, and here's a cumulative return. So $10,000 into 25 trades gives you $17,549. The percentage on the right is not the percentage that your account would grow. This is a cumulative return in profit percentage. If you had a $100,000 account and you put $10,000 into each trade, your gain would still be 17,549 or 17.5%. Now, this is only 25 trades. These are the most recent 25 closed trades, or at least first profit target. Just a couple of months worth of activity. Thought it was beneficial to see that. This is straight out of the Lazy Swing Trader Automagical Algo system. This is where you get the text and email alert when a trade happens. You see a watch list ahead of time. You know what's coming. You can set up your orders accordingly. Profit targets, stop loss targets, first profit, second profit, some cases third profit. It's all in the back end for the member viewing pleasure. Lazy Swing Trader Automagical Algo system. Back to price targets and why. Well, let's look at a couple of things. By the way, the volume down here, institutional participation. Spike in volume tells you institutional participation on the downside. So, and you don't have to hear me say this to know this by now. This is Monday morning quarterback after the market closed, but there was real selling by real institutions today across the board. NASDAQ was down 3.5%. We'll get to that in a few moments. So let's get back to this. So we have our trend line. So let's give a refresher. Here's a monthly chart. The trend line connects this high to this high here in 2021, 2022. And then you see the breakout over here in June of 24. They found resistance in May. They broke out in June. They got a little bit above it. And when you're talking about a scale this big, they got a little bit above it when you consider the amount of time that this trend line goes to. They got a little above it, putting in a monthly tail candle, by the way. I'll have you know, the month's not over yet, but that is information worth knowing. And then you see they're coming back to do what? Run a test of the most recent breakout area. Where have you ever heard me say that before? Now, that does not mean that they have to stop on a dime and go right back up. Spiking through it would be normal garden variety behavior. They could spend a day below it. They could spend a week or two below it. Getting too far below it and they're giving up the line, it's a false breakout and all that stuff. But right now, we're focused on the line. They should, under normal garden variety conditions, have a bull-bear battle either around or slightly below that line. So therefore, let's take that trend line, let's look lower and find the next major price that I have, creating a zone of support from a longer-term perspective. It's a daily chart perspective, meaning they don't have to bounce into and out of this zone all in the same day. This could take a few days. Hence, they could find a low, put in a low over a period of time in a zone. That does happen. There will be an ultimate low, but when you look at other situations, look down here. Took them a while to put in a low. They go back and forth for a while. So therefore, where is that secondary price? Fire up the sticky notes. That's what I got. 530.30 down to 527.40. Now, they don't have to get down there, but if they do get down there, that's an area I would be expecting a bounce back in the other direction, even if it took a few days. Below the trend line, we're starting to look for signs and signals of a low. So you have a place, you have a zone, and you have a process for how they put in a low. How they put in a low is taught in the course, Lazy E-mini Trader. Here's one more bonus number, 533.07. I consider that a breakout area, forgetting about the trend line. The market broke out above the trend line, yes, but that's not the only breakout area on the chart. This is another breakout area if they're going to spike the trend line, but they're not going to get to 530, 527, 528, 529 down in that zone. Then I think they're going to make an effort/attempt at 533.07, give or take. It's a breakout area. It's this red candle here. So the market ran up to this spot, and that was the high in this run before the pullback, this pullback here, okay? Then they went up back to the trend line and then broke out above the trend line. This is where they found resistance at the trend line. So let me remove this arrow. That's where they found resistance at the trend line the first time. The trend line is a rising trend line. So they beat on it a little bit, and then they broke above the trend line. But this is really the area or the price that they actually broke out from, 533.07. So I've given you three numbers, put them on one sticky note. Most of us need to be in sticky note conservation mode. I feel these are important numbers. These are my numbers. We'll see what happens if they get below the trend line. By the way, there's a gap at the trend line, so you have a gap over here, 536.95, and if you draw a line over from there, what do you have? You have the trend line. So right now, if they get below today's low, and what they did was they essentially teetered on these lows here that are the entrance to no man's land right before they fill the gap. So this low here was 539.59. The low today was 540.29. So they almost got there, but they didn't even get to that low yet today. The low was 539.59. That's the gateway. That's the low they have to break in order to get to the trend line and fill the gap. These are the type of things that we go over in detail in the live trading room every single day. We pick apart the charts, and I show traders where I'm getting this stuff from. It's a learning process. All right, now that I've given you the goodness, I got to give you the other side. Today was a shitburger day for me, and certainly for a lot of traders inside the numbers. I take the bullet. I was wrong. It was a trend day down. They never bounced. Therefore, they didn't bounce at my support area. We'll cut to the chase. I was a buyer at 547.20. If you scroll up, you'll eventually see a zone. There it is, down to 545.65. And that's what it looked like on an intraday chart. It was a trend day down. We talk about it in the live room. Most of the time, this does not happen, but it does happen. It's an awareness. They basically stopped at 545.65 for a little while, and then they gave it up and they trended lower. And therefore, it was not a good day for Inside the Number members from a trading perspective in the SPY. We trade other stuff. There's stocks on the move. There's money being made. But from an SPY perspective, I did not have it today. Just got to call it what it is. Bite the big green apple, as they say, or the big green frog, I believe. I'll still let you see all the notes. I always do. I'm an open book. This is what it is. Read the notes, pause the video, go back to the chart, and double check the work. It's all in here. Every number I was looking at today, and hardly anything worked in the spiders. That's just the type of day it was. Got a case of humble pie today. Let's take a look at some stocks on the move. We'll take a look at Google and Visa. Otis and Meta we'll look at. IP we won't. It didn't hit its entry objective. It's off the table. But we will look at the other four. Google, 172.30 was the number. Opened right above it. Into 172.30. Ripped it back up in the other direction. Gave you just under $4 in about a half an hour. Visa came up short right out of the gate. Rallied up. Gave you the trade without getting to the number. Came back down, did the number, then gave you the trade. So by the textbook version, in the manner in which comes into play. So this one was really off the table from a trading standpoint. They take the luster off when they do this. Come close, give you the trade, come back down. It's not the same trade, but the numbers work. Otis was a screw job. They opened below the third number. 90.89 was the third number. Opened below it and ripped it right back up. But it's off the table because they opened below the third number. Technically, that's the manner in which, that's the way I do it, painting by the numbers. So therefore, this one technically was off the board. But the numbers worked. Meta, you could see it opened below the first number, so this one's off the table. Second number activated. They gave you a bounce at the first number, or the second number, pardon me, and then another bounce at the third number. So both these were technically successful bounces, meaning base hit or more. Well, the second one was maybe just shy of a base hit. But this leaking down with the market getting killed, I doubt anybody took this at this point in the day. But this one, we had money made in the live room. That much I do know. What's going on over in Camp IWM? I left 224.60 on the board because that's the place where traders in the live room shorted it last week as that group trade, quote unquote. Almost got back there over the last couple of days, not only yesterday, but even today, and look where they are now. So we'll see if we have an ABC here. So here you have a leg down, B leg up that occurred over the last couple of days, and we're not yet in or completing the C leg. So this is in a different position on the chart. Money rotated into the IWM. It took off. Money flowed into small caps, and they went like a bat out of hell over here. They're in a different position on the chart. We'll see if they even get below Friday's, or this is Monday's low. Remember, nothing goes down every day in a straight line. Just like yesterday, you have bounce days, and then you have down days, all that stuff until they find a low. Time is more important than price. Still have an active tail candle with a retracement on the weekly chart. Nothing more, nothing less. The monthly chart ran a test of a breakdown candle high. Nothing more, nothing less. Funny how that works, isn't it? Folks down at the transportation department, since the failed breakout above that trend line, coming right back in towards the middle, in between the two trend lines. The weekly chart, you could see it here, still above all the moving averages on the weekly chart. This week's close in 2 days will be very important based on where they are right now. Into this somewhat of a sloppy convergence of moving averages on the daily chart. We'll see how much support this area is. Look at the last breakout area in the sequence. You could say it's right here. So they've come back today and they closed below that. How long will they stay below? Will they pop right back tomorrow? Or will they have another leg down headed to a different destination? These are all the things that we consider. And by the way, not just on weekly charts or daily charts, intraday charts. Why? Because all charts act and react the same way. Many of the things that we discuss in here in the evening are applied during the day on different charts. Many using the same charts, different charts, a combination of charts. It's like Chartorama. The Q's taken out behind the woodshed down 3.5%. $17. How you doing? Here's where they're headed. The weekly chart, you could see they're pointing right into that 20-week moving average. How about that for a breakout area? Spike, the 20-week moving average, hit the most recent breakout area just below, happens to be right around the big fat or semi-fat round number. It's right above 450, it's 450, 451, something like that. Actually, there's the exact number, it's 449.34, a spike of the semi-fat round number, spike of the 50-week moving average. Are you telling me that there's not going to be a bull-bear battle in there, even if they spike the most recent breakout area? Sure there is. I'll have another number down there if and when they get there. Rest assured. Live Room will have it. Inside the Number members will have it. We'll have it. What about the daily chart? We have a similar situation, but different. So you have a different breakout area. So that weekly chart breakout area is down here on the left. The daily chart has another one. And this is actually it. This high here is 460.58. But I have a number just below 460. So 460 to 459.20 could be some intraday support. Watch that number tomorrow, Friday. Just watch that number when they get there. There should be a bull-bear battle there, at least from an intraday perspective. XLF approaching its most recent breakout area. Below that, you're looking at 41.85. That's a broad stroke. It's not an intraday number. It's a bigger time frame. It's off a daily chart. There's support in there. Smash Mouth getting taken out behind the woodshed. Down 5.5%, almost $14. Heading right for that daily chart 100 period moving average. This was squirrely from the jump. Remember this reversal candle? Then we had this wedge-ish formation, gap down, and the rest is history. They're actually right now coming into a most recent breakout area. Again, don't have to stop there on a dime. It's a target on the way down. Spiking into it is fine. This is a 100 period moving average right there, so you would expect them to go hit that. But when you look at the weekly chart, this is where it comes from. This spike high, they sold off. They rallied above it. They broke out above it. They're coming back to test the most recent breakout area. See what happens at this spot. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.